if you want to make a good investment, you should buy something scarce and desirable that, that someone richer than you and more cultured than you and smarter than you will want to buy from you in a decade. And that's what I think of when I think of Bernard Arnault, someone richer than me and more cultured than me, and I wonder, would he want to buy this thing? And clearly $10 million worth of hotel space in Zimbabwe probably may not be that appealing. And you never know with real estate whether the person you want to sell it to is going to want to buy it. And of course, people can make more real estate. They certainly can, you know, not all land is scarce. I mean, the beachfront property is, but farmland in Kansas isn't. There's plenty of land in the middle of Australia that isn't nearly as desirable as the Botanic Gardens in Sydney Harbor.
What a month it has been for crypto's #1 asset, as it has seen its price increase by over 30% in the last 30 days. At the start of October, many of us were questioning whether the usual Uptober conditions were going to set in and things weren't looking good due to the situation in the Middle East. However, Bitcoin has shown resilience all year and managed to drag itself out of bearish conditions and pump. Mike Belshie, the chief executive officer of cryptocurrency exchange BitGo, has suggested that all indications are leaning toward a favorable outcome for a spot Bitcoin exchange-traded fund. However, he emphasized that the journey ahead won't be without challenges. In an interview on November 16, Belshie explained that based on discussions between firms seeking Bitcoin ETF approval and the United States Securities and Exchange Commission, SEC, he holds an optimistic view that approval is imminent. In this video, Michael Saylor talks about Bitcoin mining and ETF approval, stating that even with the approval, MicroStrategy still maintains an upper hand in providing the best Bitcoin services, as ETFs incur charges but MicroStrategy doesn't. Let us now get into the video. Don't forget to like, subscribe, and drop your comments below.
The ETF, a spot ETF definitely increases appetites in general, because right now, in order to buy Bitcoin, you have to set up a relationship with the crypto exchange. And most institutional investors don't have a crypto exchange relationship, and most retail investors don't have one. And most of the time, they don't want to add a new one. It takes 10, 20, 30 years for them to establish these relationships. So when the ETF comes on, you know, you could think of an ETF kind of like like a website, like an internet address. It's like, does your company have a URL or an internet address? If so, it's easy to find you. If not, it's really hard to find you. If I can find a website in Australia in about 5 seconds with the URL, and it might take me, you know, 3 months to come there and knock on the door. So ETFs are like the universal protocol of access for financial assets. They're revolutionary. If you don't have the ETFs, it's probably, to say it's 100 times harder to buy would be an understatement. It might be 1,000 times harder. And it's not just because of that, but the other catch is, it's not just 1,000 times easier to buy Bitcoin via an ETF, it's also free, because I can finance the deal. If I'm an investor, I could pick up the phone and buy $1 million worth of Bitcoin in about 15 seconds and put up not a dime, because the bank, JP Morgan or Morgan Stanley, will loan me the money. And so you're talking about opening the floodgates to hundreds of trillions of dollars of wealth, where they can buy it in an instant, and they can finance it, and they can buy it no money down. And so right now, and after they bought it, they can borrow against it. And you got to contrast that to the current situation, where it takes me a year to set up the account. I have to come up with the cash, and I can't borrow against it, and everybody criticizes me, and then I worry about the crypto exchange failing. So, you know, that's going to be a big change for the industry. It'll be good for everybody, and it's definitely going to be a big boost for Bitcoin. As for MicroStrategy's position, if you look at the futures ETFs, the reason people don't like futures ETFs is by the time you're done with it, they've charged you 10% fee a year. I mean, the cost of rolling the futures is not 1% or 2% a year. It's like 5 or 10 or 20% a year. It's obscenely expensive to cover this with futures. So the spot is going to be a 50 basis point or 100 basis point or something. But let's say 50 basis points. There's a fee to a spot ETF. And over the course of an infinite duration asset, if I charge you 1% a year, that's like taking 20% of your money. 1% a year over the course of 30 years, discounted back with normal interest rates, is like you invest $1 million and you give me 200,000. That's the cost of 1%. The cost of 50 basis points is 10% of your money over the course of the infinite duration. So these ETFs, they charge a fee and they have no leverage. They're unlevered and they charge a fee of some sort. MicroStrategy doesn't charge a fee. We don't charge 50 basis points. We don't charge anything. We basically provide that acquisition and custody service and cover it with our operating business. So we don't charge a fee. We are levered. We use leverage. So we borrowed $2.2 billion at 1.5% interest to buy Bitcoin. If you can borrow $2 billion and pay 1% interest and buy Bitcoin, I would recommend you do it, right? That's not a bad idea. You probably would do it. We actually borrowed $1 billion at 0% interest. And so if you could borrow $1 billion at 0% interest and buy Bitcoin, you probably ought to do that too. But if you can't do that, you can invest in MicroStrategy.
Marathon is the largest public miner by hash rate, with 19.2 exahashes per second online. Moreover, the firm is also the largest public miner by Bitcoin held, owning a stack of 13,396 Bitcoin worth an estimated $474 million at current prices. According to the report, Marathon has grown its Bitcoin production by 467% in 1 year, expanding its hash rate from 7 exahashes per second 1 year ago. This has enabled the firm to go from a meager 616 Bitcoin produced in Q3 2022 to a massive 3,490 Bitcoin in Q3 2023. However, the firm mentioned that it would be pivoting to international joint ventures. These could make it the most geographically diversified miner and gradually reduce production costs over time. Let us now listen to what Michael Saylor has to say about Bitcoin mining.
Bitcoin mining is really amazing, right? We're up to like 460 exahash now. So the mining, the power of the network just keeps getting greater and greater. It's growing 70% a year on average through bear markets and bull markets. The Bitcoin network is secured, in my opinion, by 4 things. It's secured by electrical power, electricity, like 15 gigawatts of it. It's secured by hash power, computer power, 460 exahash. And that is all the computer power of the world. All the computers in the world that are not Bitcoin miners, if they all started hashing Bitcoin, I don't think they would reach 460 exahash. So it's a lot of computer power, but it's also secured by economic power. There's more than $500 billion that have been invested in the Bitcoin network, and the holders that have invested that money are going to defend the network politically and otherwise, right? A company like MicroStrategy's invested, $4.6 or $4.7 billion. Before someone screws up the network, you can imagine that all of our lawyers and all of our finance people and all of our technologists and all of our engineers are all going to be doing something about it. And we're not even 1%, right? There's 100x more than us out there, and those people feel strongly too. So economic power matters. And then finally, there's just pure political power. There's 220 million people that have Bitcoin exposure. And 220 million people is a lot of people, a lot of voters, and they all know politicians, and they all know corporations, and they're going to fight. So when you think about all of those actors, and they're all running nodes, and they're all operating mining rigs, and they're all talking and doing things, that's a lot of security, and it's it's a multi-dimensional form of security. It's not just mining. But my views on mining is Bitcoin mining hash rate's going to continue to expand. It's going to spread to the 4 corners of the earth. Every place someone has stranded energy, stranded capital, every place where they want to plug in, they're going to look to Bitcoin mining. Bitcoin mining itself is going to be the primary beneficiary of transaction fees, and long-term, the security of the network is going to be driven not by the block rewards. I mean, they will be a primary factor probably till 2035 or so, but in 2035, 99% of the block rewards have been delivered. And the network sometime between now and then is going to transition to transaction fees that are going to be driven by demand, for that very scarce block space. And I think those fees they will move into a growth mode and then a hyper growth mode. And when the transaction fees are growing faster than the hash rate, then Bitcoin mining is going to explode in profitability and blossom everywhere in the world. So I think that when I look at Bitcoin mining and I look at transactions, I really focus upon, what are the transaction revenues relative to the block reward, and that determines how you make business decisions.
Bloomberg analyst Eric Balchunas reported on November 17 that securities regulators are instructing spot Bitcoin ETF applicants to handle funds in a specific way. In a post on X, Eric wrote, hearing chatter that the Securities and Exchange Commission's Trading and Markets Division engaged with exchanges this week on spot Bitcoin ETF 19B4s is advising them they'd like the ETFs to do cash creates versus in-kind and has asked them to get in amendments in next couple weeks. In an in-kind creation, a participating firm or institution would deliver matching assets, in this case Bitcoin, and receive shares of the spot Bitcoin ETF in return. In a cash creation, the participant would instead deliver cash to receive shares of the ETF. Though in-kind creations are common, Eric explained that cash creation might be preferred in the case of spot Bitcoin ETFs, because broker-dealers cannot deal in Bitcoin. He said that cash creates would leave issuers responsible for transacting in Bitcoin, while brokers would be allowed to avoid relying on unregistered subsidiaries and third-party firms. Eric said that this approach would result in fewer limitations overall. Eric estimated that only 2 or 3 of the current spot Bitcoin ETF applicants plan to do cash creates before the rumor, meaning that the other firms may have to adjust the content of their filings or risk having your application delayed. Eric said that the current development does not change his prediction that there is a 90% chance of a spot Bitcoin ETF approval by January. He called the development a good sign and an indication that the SEC has a path forward. Eric did not provide any source for the rumor, and the SEC has provided few public details about how it is engaging with ETF applicants. However, the SEC began to seek input on various ETF applications starting in late September, lending to the rumor that cash creates may have been one of the ideas put forward. Those questions otherwise focused on known controversies, such as concerns around market manipulation and surveillance sharing agreements. The SEC is expected to approve or reject a spot Bitcoin ETF by early next year, as an application from ARK Invest has a decision deadline of January 10, 2024. What are your thoughts regarding the ETFs and the SEC's rumored new rules from the filing? Let us know in the comment section below. Also, make sure to like, subscribe, and turn on notifications.